Making $180 trading the S&P 500. What's going on, guys? Welcome on into a recap here today. So we have a S&P trade. This is a trade on the 25K account. To be honest, a little bit smaller on the sizing today, and I'll explain why in a second. But it was a good trade. It was a good, just kind of a standard look that I'm looking for. It was a good trade. And this was a short. This kind of sums up my thoughts on shorting versus longing. And you'll see kind of through the chart. Now, of course, every situation is different. But when you have true momentum in the market, in my experience, for my strategy, and everyone has different views, experiences, but for my experience with my strategy, when we get momentum, as in, we're moving, like we're not just chopping around up and down, not sure what direction. We got direction. We're establishing direction, whether it's a 5-minute time frame, the 1-day time frame, 1 hour, it doesn't really matter. The downside moves are cleaner. They tend to be faster, and they tend to pay, or I tend to do better with them. That's all I can tell you. The unfortunate aspect is that we are in a bull market, and we generally only see bear markets for short periods of time, which is not like, oh my God, now I have to change my strategy. No. But I need, just based off of tracking over 1,000 trades, I have noticed this. Some of my best months have been months where I've been taking more shorts, and we've seen the market declining overall. Now, we're trading the S&P in this example, and this was taken with a, well, I'm just going to log my setup here. Is a bear flag setup on the 5-minute time frame, and this is on the 25K account. So my plan on the $25,000 account right now is I do not want to risk more than $200 on a given trade, and I'm looking in that $150 to $200 range. Did I risk $150 here? No, I actually risked about $130-ish on the trade from what I remember when I originally got in. I entered the trade on the breakdown underneath this level. I'll go back. This is on the platform that I was trading on, which, by the way, the account, I'm covering it. I have a trade on silver, which is a swing trade. So we're currently down at $50. We'll see what happens. We're currently up to 25,420 as a realized balance, but my current equity is that minus 50 or 56 with the silver trade. So 25,300 and whatever. That's where we currently are at. This is on Trade Locker through One of One Funding, which is the prop firm that I was using for this trade. So if I pull it up on the S&P futures, you will see as it loads that we had clear momentum to the downside today. And the reason why it was a little bit easier for me to take this short when I usually wouldn't do this was because of that momentum and because of that volume. And because if you just look at the volume compared to the day prior, substantially higher, and we had the CPI, and the CPI initial reaction was positive, we kind of came down, chop, and then boom, hammer was dropped. I didn't short that. My short actually was inside of here on this consolidation break right there. So I enter a short here, and I look for 1.5 to 1 risk reward roughly was what I was looking for, and that ends up taking me out somewhere near. I did try to scale out, which I then got stopped out on, but on the small piece that I left on, but I stopped out in the green for that trade, or for that extra piece. So you can kind of see the executions here. The entry was right here at this time, 10:22. That 10:22 is, I believe, Central Time. So 11:22 Eastern Time. 20 minutes later, I got out of, essentially, I had 0.15 lots. I got out of 0.12, and then I got the rest of it I sold once it kind of retraced and made a higher, or it broke above a lower high, essentially. So here's what I was looking at. Breaking down there, and I got what I was looking for. So I guess it's easier to draw this out with something like this. So my stop loss was originally above this candle right here. I could have put it to the top of that consolidation. I put it a little bit lower initially because I was like, hey, if we end up pushing back above this candle high, I just don't want to be in, and that's going to be a perfect example of chop. I don't want to play with chop. But there really hadn't been a lot of chop prior. We had, clean momentum move down and just pressure. The pressure was on, so you had the momentum to the downside. Now, I will say that on this trade, the problem that I will say, like I did have a concern with trading this because of the bigger time frame pushing to the upside. Now, you can say that, nope, this didn't fit the criteria. Why do you trade it? Well, it did on the short-term time frame. We had volume, we had the setup, we had the trend on the 5-minute time frame. What we did not have, and I will be honest, we did not have this, was the trend on the bigger time frames. Here's the 1-hour time frame. We did not have a downtrend. We had an uptrend, which I normally will not trade this situation. However, if there is going to be an exception to that rule, and this is where the discretionary, subjective nature of trading comes into play, I believe. If there is ever going to be a time to break that rule or a time to bend that rule, it is under high volume and momentum. It's not me trying to like justify why I did some dumb shit. No, this is like I traded my strategy. Just technically speaking, we didn't have one of the criteria that I usually look for was not really there. However, on the other hand, you can say this is a great time to do that because we're up so much that when we get the downside day, you can make a ton of money. Yeah, you can go both ways. Either way, I will admit that the higher time frames were not aligned, but the shorter time frames were aligned very, very well. The volume was aligned very, very well, and I got my perfect looking exact setup that I look to trade. I mean, and it was also a downside move, which with almost all the large cap tech stocks out there today down over 2, 3, 4%, like that's what I'm looking at on the top of my screen. I mean, if there was ever a time to do this, it would be this time, and this is like the time. Now, secondarily, I didn't size very big. So this is kind of like, it wasn't like a half size, but I did not try to come in here and swing a $200 risk, which is like a max risk on this account, swing a $200 risk on this trade. Would I have done so if the higher time frames aligned? Yes. That's when I would have went and said, okay, I'm going to risk 190 and I'm going to look to make 350 or whatever the number would have come out to be, 250, 300, whatever the number was. Something like that. Whatever the 1.5 to 1 risk reward would be on risking 190. So do the math. And that's kind of the thought process. So technically speaking, winners on the 25K account going forward and on a normal, perfect, like everything is this, normal, would be more than this. Like if I won on a normal size trade here, I'd probably be looking at 250 plus. We're looking for winners. But we sized down a bit here. Not half, but not full, and somewhere in between, just because of the higher time frame not being aligned. But my sixth sense tingling saying, yo, we got momentum. Volume is there. Perfect setup. It's a downside trade, which I historically like more. I'll take it. So I don't know. That's just me being brutally honest with myself and explaining the thought process behind it. Whether that makes sense to you or not, I don't know. But that's the deal. So I'll leave a link to TradeZella where I track all this stuff below. We're still waiting on them to adjust or connect the stockbroker, but I've done the recaps on those. So this is technically speaking a little inflated. We're actually not up this much. We are green on the month, but we are not green by $415. I can tell you that for sure. And our win rate is definitely below 50%, which, hey, green below 50, I'll take. So I'll see you guys in the next one. Peace.